Wall Street ends higher ahead of a big week of earnings. The Dow Jones rises over 300 points. Asian markets open mixed. South Korean market Kospi also falls as Trump hikes tariff over trade deal approval delay. The gift Nifty suggests a positive start for the Indian market. Crude prices edge lower as a U.S. winter storm disrupts crude production. Tension between U.S. and Iran also add to uncertainty. Precious metals notch record highs amid heightened global geopolitical tensions. India and European Union conclude FTA talks, calling the deal balanced and forward-looking. EU Trade Commissioner tells CNBC TV 18 in an exclusive conversation that legal scrubbing will begin only after the announcement that will happen later today. Both sides hope that the deal could be implemented by 2027. Kotak Mahindra Bank reports an inline set of numbers for Q3 FY26. Spike in employment costs due to a new labour code results in lower profit, while Axis Bank EAT was a positive performance with profit beating estimates and improvement in asset quality. Asian Paints Tata Consumer Marico will report their Q3 FY26 earnings today. Gross margin is likely to improve for Asian Paints, while Marico could see operating profit growth touch double digits on a year-on-year basis. Hello, good morning. You've tuned into CNBC TV 18. You're watching Power Breakfast with me, Vinny Motiwala. Well, yesterday we were not working, Asian markets were on, and today we have a lot of cues that have come in from the global front as well. While US markets, obviously we saw them closing with some bit of a gain, Asian markets today have opened up a bit mixed. While Taiwan index Hang Seng managing to hold on to gains, we have the South Korean index Kospi that's trading with cuts in today's trading session. Obviously this has come in after the commentary that came in from President Trump on increasing the tariff that they've applied. And because of that, we're seeing Kospi trading with cuts. Nikkei is trading very muted with a bit of a negative bias as of now, 0.05% down. Shanghai also is trading with cuts of 0.3%. So that's a bit of a mixed opening from the Asian market front. But Nifty implied open as of now, indicating a bit of a positive start for the Indian markets. 83 points up is what we're keeping an eye out on. So let's watch out for where the Indian markets are headed today. But that's the global action, Asian market action that we have for you all this morning. How is all this going to be impacting our Indian market? We have a team of research joining us to set you up for trade, tell you which are the important stocks to watch out for. First up, let's go across to Gaurav, who's here to tell us which are the important cues that we're keeping an eye out on this morning. Good morning, Gaurav.
Well, good morning. If you look at Nifty, it was actually one of the worst performing month in terms of the January series, because so far it is down more than 2.5%. And remember, today is the last day of expiry, so it is really a key thing to watch out whether Nifty can actually revive some of the losses that it has shown. In fact, for the last week, we saw Adani Enterprises, Eternal, Wipro, Adani Ports, Cipla and Reliance Industries, all these big players, they saw some kind of pressure, and that is the reason why we saw this Nifty downfall as well. On the other hand, we saw Dr. Reddy's, HUL and Tech Mahindra actually gaining in trade. Apart from that, on Friday itself, we saw a sharp fall in Eternal, Indigo, Axis Bank, who declined in trade. So let's see if there is any revival in these stocks as well. Other than that, if you look at the options chain, now that suggests that 25,300 is a key mark to watch out for as a resistance level. And on the downside, 24,850 is going to be a support for Nifty, at least for today, because today is expiry day. Last week, we saw all the sectors ended in red. In fact, if we have to call out a few, Nifty Realty, that was down almost by 11%, and on Friday itself it was down 3%. This was led by the sharp fall that we saw in Godrej Properties, Lodha, Oberoi Realty. So it is really important to see if there is any material news flow which comes in these companies to revive the fall. Other than that, Nifty Media, Nifty Bank, Nifty Energy were some of the major indices who ended in red. Lastly, for today, India-EU trade deal negotiation, that is something that we should be watching out for, because the deal has been concluded and we will get the results soon. Other than that, from the results point of view, we have Asian Paints, CG Power, Idea, Tata Consumers and Marico, some of the big names who will report their numbers along with the others. And lastly, over the weekend, we saw big names already coming up with the results like Kotak Mahindra Bank, Axis Bank, IndusInd Bank, MCX, Godrej Consumers, Ultratech Cements. All these companies are going to have some grip on Nifty today, but all in all, we are hoping for a positive start in Nifty.
Okay, thank you so much for that, Gaurav. But let's go across to Ria now, who's here to tell us which are the important stocks to watch out for in the trading session. Good morning, Ria.
Well, good morning. Let's start off with Kotak Mahindra Bank reporting its Q3 numbers. Net interest income has seen an increase of roughly 5% and net interest margin has come in at 4.54% versus estimates of 4.6% for this quarter. And separately, the board has also approved a fundraise of 15,000 crores via NCDs. For Axis Bank, the net interest income has gone up by roughly 5% on a year-on-year basis. For Godrej Consumer, the net profit has come in at 498 crores, well below the estimates that we were working with. Revenue has come in at roughly 4,099 crores, slightly below estimates of 4,112 crores. For IndusInd Bank, the net interest income has declined by 13% on a year-on-year basis, and the PPOP has declined by 27% for the bank versus expectations of a 35% fall for this quarter. For Ultratech Cement, the EBITDA per metric ton has gone up by rupees 140 on a year-on-year basis. Volume growth has remained strong for the company, while realizations have remained weak in this quarter. For Nuvama Wealth, the net profit has been largely flat at 254 crores, while revenue has seen an increase of almost 7% on a year-on-year basis. For Urban Company, they have reported a loss this time around of 21 crores versus a profit of roughly 232 crores in Q3 of last year. Revenue has seen an increase of roughly 33% for the company, and the board has also approved a pact with Amber Enterprises to manufacture and supply products under the native brand of the company. For BPCL, the net profit has been below estimates at roughly 7,545 crores. Revenue has come in at 1.1 lakh crores for the company. For JSW Energy, revenue has seen an increase of roughly 67% on a year-on-year basis, while net profit has come in at 420 crores versus just about 168 crores compared on a year-on-year basis. The bottom line has been aided solely by the deferred tax write-back of 751 crores. Otherwise, this was a loss for the company. Moving on to Marico, PVR Inox is going to sell its full stake in 4700 BC brand owner for Z-Maze to Marico. For Vari Renewable Technologies, they are going to acquire roughly 55% stake in Associated Power Structures for 1,225 crores. Apart from this, Torrent Pharma will also remain in focus. The US FDA has completed an inspection at the company's facility in Dahej. They have concluded this with 0 observations. And the last one is Zydus Life. The US FDA has concluded an inspection at the company's manufacturing plant in Gujarat with 3 observations for them.
Okay, Ria, thank you so much for that. And for the final leg of update, let's go across to Mangalam, who's here to tell us which are the important cues in the world of F&O. Good morning, Mangalam.
Good morning. So it is a Tuesday, which implies that it is also an expiry. And more importantly, it's the last Tuesday of January. So this is Jan series expiry today. And this has been a rough series for the bulls. The Nifty is down nearly 900 points this series itself, and most of the cuts have come by in just the last week. In fact, on Friday as well, there was a big gash that we saw towards the end of trade on the Nifty Bank, as well as the mid-cap index. And if you looked at the, rupee versus the dollar equation, towards the end of trade, we had that big spike in the rupee on the downside, and it's at a fresh record low. So stability of the currency, extremely crucial for any sort of direction in the market from here on as well. Now that the market's fallen below, the 200-day moving average of 25,143, the important level to track will be the low of Jan 2021, which is basically, 24,920. So that's a level that I'll be tracking. Jan 21, 2026 rather. Cash market flows. The FIs are selling lock, stock and barrel. You saw them sell about 4,000 crores in Friday's trading session as well. The DIIs are matching them dollar to dollar, but that is causing a fair amount of pressure on the rupee. The FIs sold about 2,000 crores in index futures as well. But over the last few trading sessions, the exposure has been increasing on the long side. That tells you that maybe some of the shorts for this series are covering their positions and not carrying their rollovers forward, which means that February series will have a lot more longs than Jan. The important options, 25,200 call writers, very active, 25,100 call writers, equally active. 25,000 put writers actually had to unwind their positions, and 24,700 put writers bought some, options just for a punt. What does this tell you? That maybe the Nifty is likely to be in this range of 25,000 to about 25,250 thereabouts. Any sort of rally will see some supply. The put-call ratio at 0.7 times is extremely oversold. At some point, there will be a bounce, but not necessarily that happens in January series itself. Today could be a range-bound expiry with a lot of triggers in the Feb series. You have the union budget, you have the RBI policy, remainder of the Q3 earnings, and any sort of updates on trade deals that will be important.
Okay, Mangalam, thank you so much for that. Surely we'll keep an eye out on those important updates there. But let's move on. And India has concluded its FTA talks with the EU, and the announcement is expected later this afternoon. Abhimanyu is bringing us the latest on this front.
It has already been dubbed as the mother of all deals between India and its largest trading partner, the European Union, for which talks have already been concluded and a formal announcement is likely to be made later in the day today. Of course, both the sides are looking at significant gains as far as increasing bilateral trade is concerned. India is looking to increase its exports of labor-intensive products like marine products, textiles, and leather. On the other hand, the European Union is looking at India as a potential big market for its EVs, for its cars and automobiles, and also for its wines and spirits. It would be interesting to note how the issues of carbon tax and EU deforestation regulation are going to be discussed and addressed as part of a trade agreement in which talks have already been concluded, but the legal scrubbing of the documents would go on for the next few months. Over 20 chapters have been noted so far, which cover different subjects like sanitary rules, like intellectual property rights, and even sustainability for that matter. It remains to be seen how all pending issues are going to be addressed as part of the legal scrubbing and the formal ratification, which is likely to take place sometime around 2027 when the deal is likely to come into force. So all eyes, of course, would be on the significant gains which are being looked at for both the sides.
Okay, thank you so much for that, Abhimanyu. But in an exclusive interview with CNBC TV 18, EU Trade Commissioner Maros Sefcovic tells CNBC TV 18 that both India and European Commission are looking forward to signing the deal, but there are legislative issues that are there. Adds by 2027, both sides can see benefits from the trade agreement. Listen in.
I was very much encouraged by the ambition of Minister Goyal, who would like to ratify this agreement as soon as possible. And we will do our utmost to match this ambition, because, of course, being a little bit legalistic here, what will proceed once we get to the agreement. You have to do the legal scrubbing. In our case, we have to do the translation in 24 official languages and then, of course, proceed with all the procedures. But I think there is a huge interest on both sides once we agree to really offer the positive outcome of this agreement to our economic operators and wider public as soon as possible. So I hope that by the next year that we can actually benefit from this agreement.
So by 2027?
Yes. If it comes to automotive industry, I fully understand that what was very important for Indian side was to make sure that your automotive segment will also grow in the future. And again, I think we are quite complementary. India is very strong in small and cheaper cars. European Union is strong in bigger machines. So we are looking at the way which would kind of help us to find the solutions, how we can also create new supply chains, how we can make a even better business case for European car makers, and at the same time to open also this new possibility for cooperation for ET car makers. I mean, in such a big deals like this, you need to look for common approach, mutual understanding, and a best outcome for both, and I believe that we are heading in the direction.
Okay, on that note, we're going to slip into a very short break. After the break, we'll get you all the cues from the White House in our special segment, Trump What? Stay tuned in. Welcome back. Thanks for staying tuned into Power Breakfast on CNBC TV 18. And in the US market, Wall Street ended higher on Monday with all the three major indices posting solid gains. This S&P 500 that ended higher by 35 points, rising 0.50%. The Dow jumped over 300 points, while the Nasdaq Composite, if you look at that climbed almost 0.43%, and that was supported by the strength in technology names ahead of the key earnings reporting that they will be reporting later this week. We have CNBC's Kate Rogers, who's joining us to get us a wrap on what happened on Wall Street. Kate.
U.S. markets were up across the major averages in Monday's trading, with tech stocks rising ahead of a slew of corporate earnings over the next few days. The Dow gained 314 points, the S&P 500 added 35, the tech-heavy Nasdaq was up 100 points. Shares of USA Rare Earth surging as much as 20% early Monday after the Commerce Department announced it's taking an equity stake in the critical minerals startup. Shares finished the day up about 5%, and it's the latest in a series of equity stakes taken in mining companies by the Trump administration as it tries to build a critical mineral supply chain in the U.S. to reduce the reliance on China. And the European Union launched an investigation into Elon Musk's X Monday following concerns that its Grok chatbot was creating sexualized images, including of minors. It follows a similar probe from the UK watchdog and will look into whether Grok violated the Digital Services Act, which requires big tech to do more to tackle illegal and harmful online content. Companies risk as much as 6% of their global gross revenue for breaches of the Digital Service Act. That's what's happening here in the U.S. Back to you in Mumbai.
Thanks so much for that, Kate. But now let's move on and get to the latest on Trump-related developments. First up, we have U.S. President Donald Trump, who has announced he's raising tariffs on South Korea imports to 25% after accusing Seoul of not living up to the trade deal reached last year. In a post on Truth Social, Trump said that he would increase levies on South Korea from 15% across a range of products, including automobiles, lumber, pharmaceuticals, as well as all other reciprocal tariffs. From 15%, it's going to move up to 25%. Moving on, Donald Trump has also threatened to impose 100% tariff on Canada if the Canadian Prime Minister moves ahead with an announced trade deal with China. Trump warned the Canadian Prime Minister that turning Canada into a drop-off pot for Chinese goods entering the United States would be a grave mistake, predicting China would consume Canada entirely. Now, some more updates that came in. U.S. President Donald Trump actually ordered the return of the remains of the final Israeli hostage from the Gaza Strip. Now, he's congratulating his officials for felicitating the release as well. And in the final update on Venezuela, Trump said that Venezuela was releasing political prisoners at a rapid rate, adding that pace of release would increase in the near term. In a post on Truth Social, he thanked Venezuela's leadership for what he described as a powerful humanitarian gesture. That's all the update we have on the Trump Watch segment today. But on that note, we're going to slip into a very short break. After the break, we'll get you the fine print of Axis Bank and Kotak Mahindra Bank's Q3 results. Stay tuned in. Welcome back to Power Breakfast on CNBC TV 18. We had two big banks that reported their numbers over the weekend, Kotak Mahindra Bank as well as Axis Bank. Let's go across to Gaurav, who's here to give us the fine print on that one. Good morning, Gaurav.
Well, good morning. If you look at Axis Bank, first let's talk about this because they delivered a very strong set of numbers, and this is if we compare it with the expectation. Now, net interest income that increased almost by 5%. When it comes to PPOP, we saw a growth of 3% and net profit that grew by 3%. Now, the number looks a bit small, but it is higher than the street's expectation, almost 7% higher than the street's expectation. What remained positive is that the provisions, now they declined almost by 37% on a sequential basis, which resulted in credit cost, which came down from 1.3% to 0.8%. mentioned, almost 50 basis point of fall in the calculated credit cost. In fact, slippages, they also remain stable on a sequential basis. Now, if you look at net interest margins, there we saw 9 basis point of fall, but it was in line with the street's expectation. When it comes to Kotak Mahindra Bank, now numbers in terms of profitability, we saw a bit of a decline, and this was lower than the street's expectation, and the reason being that because of the new labor code, that the impact that was seen in PPOP, and that is the reason when it comes to profit that increased by 7% on a year-on-year basis. Now, what happened is that for on a positive side, if you look at credit cost, now for Kotak Mahindra Bank, credit cost declined almost by 16 basis point, and at the same time, slippage ratio that also came down almost by 7 basis point. But what was a bit negative is that net interest margins, now they remained flat on a sequential basis. Now, street was expecting net interest margins to improve, and at the same time, from here on, for fourth quarter, management said that there will be some moderate NIM improvement supported by the CRR cut. So that is something that we should be watching out for. And lastly, let's also not forget that Kotak Mahindra Bank currently also trades at a higher valuation, which can actually limit the upside, at least for today, given that they have reported inline set of numbers with PAT, which was a bit lower than the street's expectation.
Okay, Gaurav, thank you so much for that. Let's take a quick look at what the Gift Nifty is doing, right? When we opened the show, it started at around 83 points uptick. It was a positive bias. Now it's moved on 115 points. So we've seen a significant uptick from when we started seeing the Nifty implied open see a move from around 25-30 points at the start of the day, and 83 points when we started the show, and now 115 points up. So we're expecting a strong positive start for the Indian markets. Though the South Korean market, Kospi, that continues to be under pressure. Otherwise, ASX 200, Nikkei, that's moved on to the positive side as well as Hang Seng managing to hold on to strong gains. Taiwan Index also managing to hold on to strong gains. Positive start for the Indian markets is what we'll keep an eye out on. But that's all the time we have on this edition of Power Breakfast. Thank you so much for tuning in. Up next, to Bazaar Morning Call.